Hi, welcome to Brendmo Business Hub channel, a channel that we talk about the nitty-gritties of managing your businesses, various aspects of the business that you are growing and the business that you are managing. Let's be honest, managing cash is often one of the biggest challenges that most people faces in this world. Do you know that business equally faces this challenge too? Actually, that's the prime reason for business failures. Come to think of it, if you don't have cash, you can't pay your staff. If you don't have cash, you can't pay your rentals. And if you don't have cash, you can't pay all other business related expenses. Someone once told me that cash is like a visitor. Do you share the same sentiment? You know, a visitor comes for a short time and off he or she leaves, leaving you where you were in the same house. Is cash like that? What about cash in your business? It's said that a large percentage of businesses close shop due to cash flow constraints. I've spoken about the 10 top tips to manage your cash flow. Please check out that video as well so you understand the tips. The business of today is we want to talk about how you can interpret your cash flow statement as part of your financial statement as a business owner or as a manager within a company. Obviously, I'm making an assumption that you have a good accountant that give you these reports periodically and that actually deliver those reports to you. I've forgotten. I haven't introduced myself. My name is Mollen Mukuze of Brendmo Chartered Accountants, an accounting firm that focuses on growing your business through offering quality advisory services in accounting, tax, compliance, setting up your controls in HR, etc. and etc. If you like the content you are actually watching on this channel, just hit that like button and don't forget to subscribe and even share this content to someone you know will benefit. Okay, to start off, a cash flow statement is essential to any business, and I mean any business, regardless of your business size. This statement is important. This statement serves a lot of purposes. It can be the basis of budgeting by actually assessing the timing and fixing the future cash flows. You can see your peak period where you get the most cash for actually your planning purposes. This statement actually also shows you how much you are getting in cash and how you are actually utilizing the cash in your business. Therefore, it's of paramount importance for you to be able to interpret this cash flow statement as a business owner or a business manager. Okay, as part of financial statements reports, cash flow statements act as a bridge between the income statement and the balance sheet. Income statement is your normal profit and loss, which shows your income and your expenses. But the cash flow, it clearly shows the inward and outward of money that flows from a business. Do you know that it also indicates the company's cash position? What's your business cash position currently? I will share a screen and show you the extracts of a cash flow statement. As you can see on my screen, it shows various activities of a company, which is your cash flow from operating activities, your cash flow from investing activities, your cash flow from financing activities. It also shows these activities at a specific period. As you can see on my screen here, these figures are in rands and they indicate 2022 periods as well as 2021 periods, which means your financial year for 2022 and your financial year for 2021, right? So to start off, cash flow, let's start off with cash flow from operating activities. Cash flow from operating activities is the core activities of a business. Operating activities reflect the amount of cash generated from the products and services of a company, and it includes the primary revenue producing activities of your business or of your company. These are the company's core business activities, such as manufacturing, distributing, marketing, the cost of selling your products or your services. These are indicated on the cash flow from generating activity. There are actually two modes of presenting this cash flow from operating activities on your cash flow statement. I'm not going to dig deep into these technicalities, but in summary, direct presentation, we have two methods, direct presentation and indirect presentation. The direct presentation simply provide a list of your cash flow activities, what you have spent your money on. On the other hand, the indirect method, which is actually the most commonly used method of presenting the operating cash flow activities, is actually a reconciliation from profit to cash flow. Under this method, like I said, depreciation, deferred tax, or revenue received from investing activities and profit and loss associated with non-current assets are included. So under this method, we try to derive our cash flow from the operating activities by moving from profit and make non-operating cash flow adjustment. As you can see on my screen, the cash generated from operations, we have a note 11 there. From this, we have got 195,252 rands in 2022. And in 2021, we have 347,763. So if I go to note number 11, I'm expecting to see how was this cash generated from operations. Let me just scroll down my screen. As you can see here, we had profit and loss before tax, right? This is your profit and loss that comes from your income and expenditure statement. This was a loss, and we have this 158 as well. Then we're having adjustments for depreciation and changes in working capital, right? So your depreciation there, you are saying it's a non-cash item. So you have subtracted it to get 254, right? So you need to add it back. Then changes in working capital, this summarizes the changes in your trade and other receivables, your prepayments, the movement in your prepayments, as well as trade and other payables. As you can see here, my trade and other receivables changed by 299,704, right? And my trade and other payable changed by 111,197 in 2021. And in 2021, they changed by 5218. So these are what we call changes in working capital. So these changes, they can be negative changes or positive changes. Then you need to add back or subtract from your profit and loss. So you can get, here you see the increase in payable means that you are not paying your debts, right? So cash generated from operations ended up on 195. So what we're trying to do, we're trying to deduce from this profit and loss. We need to add back non-cash items. We also need to take adjustment of your changes in working capital. That's cash flow from operating activities, right? So from there, we also have cash from investing activities. These include the acquisition and disposal of non-cash assets and any other sources of cash from the company's investments are included in investing activities. Typically, investing cash flow include the cash flow associated with buying and selling the property or equipment that you have within your business. Therefore, the cash changes from investing activities are called cash from investing activities. Be careful to ensure that you spend your money in things that should have the potential to bring in value or money, or those things that are enablers in your business. So these are the ones that we call cash flow from investing. So as you can see on my screen here, if you purchase equipment, let's say you are a manufacturing company, if you really need an equipment, it's an enabler in your business. It will help you to produce more products or more things. So that equipment you have invested, that's why it's cash flow from investing activities. And as you can see here on my screen, which means this company, they have invested their cash flow in purchase of equipment to the value of 60,258 for 2022. And last year, they have purchased equipment in 74,304. So if you are seeing a lot of balance sheet items, or if you're seeing that your assets are increasing, which means you are investing in investing activities for your company. But be careful. I know small business owners, they will invest in buying a car, a very big car, whatever, but make sure that car is helping in the business activity. Some of the assets that businesses purchases, they don't add value to the actual core activity of the business. Because remember, the definition of an asset is the one that we are talking about. It's a resource that you have actually invested in that will enable you or help you to earn more cash, or is an enabler for. That's a summarized definition, not the technical one. So that's cash flow from investing activities. Let's go to the financing activities. Your borrowing and repaying the money goes into here. Issuing stock and paying dividends are some of the financing activities of the company. This activity results in changes in the size of equity, capital, or the borrowing of your entity, right? As you can see on my screen, we have cash flow from investing activities. The types of those activities are the repayment of loans, right? You can see in 2021, this company repaid loan to the shareholder of 61299 in 2021. In 2022, in 2021, this company actually got income or funds. The shareholder invested or financed, not invest, to him is an investment, but this shareholder financed the activities of this business by 168. That's why it's 168,702 in 2021. And we can also have proceeds on sale of shares, right? You can finance your business through debt or equity. If you sell your shares, which means you are getting income in exchange for the shares. So in 2021, they sold their shares for the value of 900. So these are cash flow from financing activity. So out of this, if you can see on my column E here, I have A as your net cash flow from operating activities, B as your net cash flow from investing activities, C as your net cash flow from financing activities. So the total cash movement for the year, it means I need to add my A, my B, my C, so that I can see, did we have a negative movement or a positive movement? If you can see here, we had a positive movement in both years, 89,251 in 2022 and 401,572 in 2021. And from there now you need to start, okay, how did we start our year? What was our cash position, money in the bank account at the beginning of the year? So here you look at this company, if you can see, it had 370 in 2021, 904, and the cash at the end of that particular year was 772, which is the same cash at the beginning of 2022 year. So just to sum up, financial statements are prepared in an accrual basis of accounting. Therefore, the cash flow statement will convert that accrual basis of accounting from income statement into a cash flow statement. So in preparing these statements, you need information from your income statement and information from your balance sheet as well. If you forget everything that I said today, please remember the 6 key things that come out of the cash flow statement. I personally call them the 6 whys of a cash flow statement. How a cash flow helps you. Number 1, a cash flow statement indicates both the positive and negative cash outflow, right? Number 2, while positive are healthy, negative cash flows should not raise red flags automatically, as you can be investing in your business, right? Number 3, cash flow is a tool that investors assess your company's performance over a period. So it's an important tool. Number 4, an analysis of cash flow can review the quality of company's earnings through a comparison of cash from operating activities to the company's net income or net profit. For example, earnings are said to be higher if cash from operating activities is higher than the net profit. Let me simplify this. Net profit includes non-cash items, right? So your net from operating activities should be higher than the net profit so as to show a healthy business. Number 5, the statement of cash flow is a significant measure of profitability, and it presents the present and future outlook of your company. Number 6, it actually indicates the strength of the company and provides data on whether the company is sustainable and has enough cash to pay its expenses on a day-to-day basis, or is even having cash to invest in future growth opportunities. Remember to always interpret your cash flow statement because it's actually a very important statement. To understand the full spectrum or the full pack of financial statements, look out for the video that we are going to post on how to interpret all your financial statements. If you like the content that you have just watched on this channel, don't forget to subscribe or hit that like button or even comment. Why don't you just share to someone you know will get value out of this comment? Thank you.